right? Is the consumer going to take the burden, right? Just now we talked about pricing. So, I don't know if you guys remember, do you guys know anything about fair trade and organization? Anyone familiar with it? Fair trade? Okay, so basically fair trade, the pricing, if you go to supermarkets, some supermarkets would have goods sold by fair trade, or even some consumer products, not just like fresh produce, but a lot of consumer products that are actually, they have a sticker on it. It says fair trade. It means that the product is actually going to be a little bit more expensive, maybe by a few cents. So in Hong Kong dollars, maybe 20, 30 cents or $1, but it actually pays through that organization. They don't take as, they don't act as a middleman. They directly transport the farmers or the producers to connect with the market. So by means, they earn the actual profit that they're making is going to go more directly to the people who are actually the farmers or the producers. So pay attention to this as well. You guys can look up in fair trade for some information about pricing. And when you guys price or market, you can think about why are people willing to pay that price when they see the tag fair trade. Because according to some statistics and some reports and also some Hollywood stars, they support fair trade because they know where the money is going through. And then the finances are displayed, are well displayed, properly displayed online, so you can actually look into that, okay? So, maybe I shouldn't wait any longer then. Okay, let's continue. We will talk about business model a little bit. We'll go through that, and then afterwards we will go to market analysis, and then we will finish up the part 1 with the financial analysis, and you guys will learn, and afterwards we'll do presentations, okay? So let's talk about the business model. So I think previously Mingles have talked to you guys about the business model already, so which we call the theory of change. So what is the theory of change? Previously you guys should know. I'm going to just re-emphasize it a little. So it's going to be about the conditions that would meet, and then after the conditions, then change will happen. So if conditions, then change. So when you are thinking, you think about what conditions make the change. How many conditions do we have to have in order for the change to come, okay? So pay attention to these things. So you have to explain the theory of change in your proposal as well. So again, just example, if jobs are created in low-income areas, personal well-beings will increase and the quality of life in those neighborhoods will increase, okay? So jobs is a part of the condition, personal well-beings is a part of the condition, and then it improves the quality of life. In the end, there would be an increase in the quality of life of the neighborhood, the entire neighborhood. So pay attention to how the ultimate goal is, where the ultimate goal is, and how to express the process of change. You have to include theory of change in your proposal. Remember this. Business model canvas, I think Mingles have talked to you guys about this. So there is a, basically, if you look on your page, I've included this in your notes as well. So it should be on page, give me 1 second. It should be on page, where is it? It's on page 28. Okay, it's on page 28. So pay attention to this. So what are the key resources, the activities that leads to change, and also the key partnerships. So as you guys have said, or some groups have talked about, there are some partnerships going on. If there are partnerships, indicate not just what the partnerships are, but where did the partnerships come from, and also why, how do these partnerships form, and also value proposition, and then it comes to the consumer segment, where there's the channels of communication, the resource, the relationships that you build, and in the end, how does the consumer actually benefit, or the consumer actually, well, how do you generate the revenue from the consumer, basically, okay? So there's the revenue to cost structure. So I'm not going to go further into this because I think you guys have learned about this. So the mission is usually, at least, you must achieve the double bottom line, okay, the double bottom line, and then it's better to achieve the triple, where there's the environmental as well. But I read through some of it, it seems like everyone had the triple, so it should be okay. Okay, impact change value. So you guys, the impact change value, you guys have the inputs. We've talked about this just now. The inputs, the activities leading to the output, output leads to the outcome, and then goal engagement, right? And then how do you calculate the impact? How do you calculate the impact? Your assessment here is not just to present the inputs, the activities involved. Obviously, your proposal should include those parts. But on top of that, how does the activities come to this output area? And then how does the output go down where the impact is? So the impact should deduct what actually would happen to the situation if, like, under this condition, if you don't have the input, what would actually have happened anyway? And then that would equal to the impact of your corporation, okay, or your enterprise. So pay attention to that. The impact is different usually, and it might not be the same as your expectation too. So, but try to indicate your assumption of what impact is, okay? So, again, like this one, visually impaired people, professional training methods. And then they go and hold exhibitions, tour guided by these visual impaired people. And then more of them have experienced the darkness, right? More sensitive beyond visual senses. And then in the end, increase the disabled leadership development and build the gap between the visual impaired and the society. So there has to be, because generally speaking, the visual impaired already knows how it is like being in the darkness, right? It is the society that doesn't understand how the darkness is. So this is the impact value you come up upon. So pay attention to how you actually come to this conclusion. And if it's assumption, it has to be logical, okay? So pay attention to that. So this is a dialogue in the dark. So objective, as I said, it bridges the gap between the visual impaired and the other groups in the society, create jobs for visually impaired people, arise public awareness towards this disabled group so they understand how it is being in the dark, right? So what is the method? Explain the method. You are going to be talking about the method because that is what you're going to do as a social enterprise. So provide training workshops, organize educational activities, special events. So these things, what things build up to the understanding of the society. Think about the activities involved. Okay, what are some social impact indicators? So these indicators are actually instruments that show, judge, and measure or indicate social, cultural, economical, and environmental conditions. So there are 4 conditions, not just 3. The 3 which you must meet, but cultural as well is the 4th one. So I don't think a lot of you did something related to cultural. Is there anyone who did anything related to cultural? No, right? No. Okay, there's the 3. You must meet the 3. The 4th one is not a necessity anyways. So indicators must might relate to participation, the well-being, jobs and money, culture, heritage, and cultural heritage and knowledge, human relationship. Okay, so how do you calculate? One of the models that we have is the iris, which it is actually not entirely recognized, but why am I introducing this to you is you can use it as a reference. So it is actually online. basically aims to increase the value of non-financial data by enabling performance comparisons and benchmarking. So we will go online. I'll show you a case. So there's value proposition, where the company's raised capital can attract impact investors by measuring and reporting. So this is the means of why you have to have these indicators. Objective set of performance measures that are compatible with many existing reporting standards. That alignment is straightforward and low cost. This IRIS calculation you can do on your own at home. It's very easy, very straightforward, enables organizations to measure, evaluate, perform against industry benchmarks, and internally set performance goals. So what does it include? I'm just going to talk a little bit about what it includes. So if you guys want to learn the details later, I'll show you the site a little. And there are case studies, and they actually have some examples of how they come up with the plans. So you might want to refer to them as well. So organizational description, so indicators that focus on organization's operational model, location, product description, financial performance, operational impact, product impact, and the glossary. So if we look at it, we'll look at it. This is one that talks, this is one that a company, a microenterprise that lends out loans to women who need and offers training and education. So I hope we can link up to the internet. Okay. So you can see on the site while it's loading. Later you'll see on the site, they'll talk a little bit about the case. So you guys can refer to in your proposal as well. See if you have the elements. So the case, and then they have the report selections. So this is the IRIS report. So you can see that. It talks about the name, the organization, the year found, the type of financial institute, the mission statement, the social impact objective, okay? And then they go into product description. What kind of products does it provide? So to who the beneficiaries are, where is the location? Remember the questions I've asked you. Client location, you have to limit yourself. Remember, the location cannot be like huge, like the entire Africa, impossible. You have to narrow it down to a specific region, or even in Hong Kong, you're looking into a lot of people in Hong Kong. How many currently do we have? 7 million, is it? Or maybe even more now, right? There's so many immigrants. So we have to look which type of people, the category, the age, the sex, okay? So this company deals with women. So be a little bit more specific. And what does it do? What the non-financial service that they offer, the financial services that they offer. So household financing, voluntary deposit accounts, so different things, livestock, insurance, all that information. So I'm not going to look into this because we will have a financial analysis part, but just so you know, there is this link available for you guys to look into. And if you guys refer to my notes, it's on page 31. There's a sample report as well to the link. So maybe I'll continue. Okay, so let's talk a little bit about market analysis. I think market analysis is quite an important part for you guys because it is talking about the people that is involved, right? Who or what is the market? To be specific, what is the market? The market is the set of all actual and potential buyers. Okay, you have assumed this bunch of people who are going to consume your product or make use of your product. But on top of that, there may be other potential people which you want to attract because as a social enterprise, you want to benefit, right? So how can we define the market? Measure market share, measuring market size and growth, specifying target customers, identify relevant competitors, formulate a market strategy. So measuring market size. When you look at market size, when you talk about each breakfast, okay? If the consumer need, what the consumer need is eating breakfast, then the relevant market could be defined as breakfast food market, right? So then you think, what are the products? So I know you guys all have the products already, but you have to think what kind of people would consume or make use of our product. Breakfast cereal, nutrition bars, porridge, oats, specialty bread, fast food outlets serving breakfast. Don't focus only on products or services that currently meet the consumer's need. Think about the future, because what the proposal is looking at is not just 1 year, okay? 1 year is the most, I think, assumption. Mostly you can assume up to 1 year accurately, and after that you should be able to project the next 5 to 10 years. So what you're looking at is a 10 years focus. Is the market still going to demand this? Is it a long-term thing? You have to think, is it short-term or is it long-term? Another thing. Think about the consumer's needs first. The consumers always come first. Remember we said the you approach previously? When you look at the person, you look at the consumer, the reader, the feelings, what they want, their needs, they come first. Remember this. So important not to define the market too broadly, because then you can't be very specific. You can't meet up with everyone's needs, okay? So if you want to sell ice cream, you define the market as food market. So market definition is to provide a meaningful framework. So it's too broad to say food market. You have to be more specific. When you think about it, it might be snacks, it might be cold, frozen food. You have to be more specific, or maybe just like frozen sweet fruit, food market. So depending on the situation. So the market definition is to provide meaningful framework for the analysis and decision making. So breakfast, a market into breaking a market into segments, and then concentrating your market efforts on one or a few key segments. Key segments only. So ice cream is not food. It's not that big. You have to actually cut it down. Targeted market, targeted market is it helps making the promotion, the pricing and distribution of your products and service easier and more cost effective. So pay attention to the size and the type of market, cut it down. Market segmentation, niche marketing, geographic, depending on the location. Think about the location, the address, the homes, the areas, the district, okay? District may be one of the things you might want to consider. Different districts have different needs, right? Even in Hong Kong, some people are closer to the ocean, some people are closer to the mountains. So think about how geographically they would be affected, okay? Demographic segmentation, based on measurement statistics such as age and income. As I said, age, younger age have different needs. Younger age are more accepting. Older age, maybe you need to influence them more, take more effort in actually communicating with them. So how can you do that? Think about the skills, the approach, income, whether they can afford your service, no matter it's $1 or no matter it is they're not going to spend any money, or if they have to spend a little bit amount of money, right? So you guys know about what is that called? The bell for old age. What do you guys call it in is there a terminology? Do you guys know what I'm talking about, right? The alarm that the old age carries around. Well, think about it. If it's $100, can everyone afford $100? What income segment are you looking at? Because maybe they can't even afford to take out the $100 for your bell. If it doesn't cost anything, what about transportation, location? How can you reach out to them? Psychographic segmentation, based on lifestyle preference. So depending on what kind of lifestyle they are, what people, what hobbies do they have? Think about this. How can you relate more to them? Research the market, internal analysis. So I think I've mentioned this before, the SWOT analysis, planning tools. It helps to actually ensure that it is sustainable, define the needs for increased skills. So what are your weaknesses? What are your strengths? I recommend that you guys do this first on your own, the SWOT analysis, and then input the SWOT analysis in your appendix so that it projects you have to improve. So maybe you come up with the first one, and then you can come up with the second one, which you have made improvement on to project and draw a comparison. So strengths and weakness. So which ones are strengths and weakness, internal and external? Opportunities and threats are external. Strengths and weakness are internal. So the strengths come from experienced and committed staff, maybe. Weakness may be insufficient of technological skills among the staff. So an opportunity may be government policy supporting. A threat, current donors have changed their focus. So think about what things you should input to the SWOT chart, right? And then do it once, do it a second time, draw a comparison, show that you have made change as well. So this is research on market. Context analysis. What does it mean by context analysis? What does it mean by context analysis? So, how external factors actually influence the market communication strategies used. It illustrates the world that your business and product is operating in, provides background information to make judgments about your proposal and marketing moves. So it helps ensure that your product service are relevant to the market and the target, okay? That is context analysis. So when you look at it, as I mentioned, there are not only 3, but 4. There's economic, social, cultural, and environmental. So when you look at it, what is the state of economy in the area or country where you will be operating? Okay, back then, I remember, I don't know if you guys know, let's take Gap. Do you guys know Gap opened a new branch in Hong Kong? Yes, where is the location? Central, right? Okay, I don't know if you guys know, during Gap, it isn't their first time targeting Hong Kong market. Do you guys know about this? No. Before, way back, I think it was probably 10 years ago, or maybe 7 at least, Gap opened a shop in LCX, in Ocean Terminal. So basically, back then, because of, I think it was around 2003, maybe around that, when there was another economical crisis. Do you guys know, or is it 2007? There was another economical crisis, and they closed down the shop. But why are they entering Hong Kong market again? Why? Do you guys know why? What is their target? They're not targeting on you guys, obviously. They're targeting, I hear it. Chinese, yes. They're targeting on the big China market. That is what they're doing. And you can see that. That is an economic state that you have to pay attention to. Depending on the situation of the economy, can the people afford to have you? What can you do to sustain your business? Social, what are the characteristics of your target market? How are they? What kind of personality? Are they very passive people? Do they reach out? I don't know if you guys know, most Hong Kong people in Hong Kong, if they want to reach out, they're very passive. They don't reach out. Maybe now it might be a little bit better. In the past, they don't reach out for help, so they don't ask for help. Usually, it takes a lot of effort for the social workers to come upon them and speak to them and ask whether they need assistance. So how can you reach out to this group of people? What is their average salary? Nowadays, you guys know, what is the average salary? What is the minimum wage? Anyone? Everyone should know. What is it? Anyone? 28, is it? $28 per hour. Okay, so $28 per hour. You know that these people are earning $28 per hour. That is the minimum wage, but some people are earning nothing. Remember this. There are people there earning nothing, and maybe they can't even afford to eat. So how are you going to assess if you're looking to help these people? What do they have in common? Poverty may be something they have in common. maybe they're very passive people, that's something they have in common, or maybe they aren't educated. So what can help to attract these people to come to your service? Think about that. What are their decision-making process? Are they very straightforward? Do they take decisions immediately? Or does it take them a lot of time to make a decision? Think about that. Okay, the third point, cultural. What are people's attitude towards similar product? You can look at the market. Although you are social enterprise, you are not profiting. Your main goal is not to profit your main goal isn't to profit a lot, but at the same time, you can look into the market, look towards similar products. What kind of products do they have in the market? What kind of common things do they have? What makes them so attractive? Okay, let's say there's McDonald's, there's Kentucky Fried Chicken. Why would you go to McDonald's instead of Kentucky Fried Chicken? Why? Why? Anyone? Why? No? Give me 1 second. Yes, I want to check this. Pardon? I hear it. Yes, why would you go to McDonald's?
I think the environment is more friendly.
Yes, environment. Anyone else? Environment, besides environment, definitely. Their service manner, the quality of service, what else?
Double cheeseburger.
The food, the variety of food they can provide. They have healthy food. What else? What else? Who is here? Carrie?
Carrie.
Carrie? What other things? They're more accessible, isn't it? Think about it. Think about what do the consumers want? What does the end user... Yes, and also price is another thing, right? They have those $20 meals that no one can actually have around, right? So Kentucky Fried Chicken does not offer us $20 meals. So think about that. Think about what attracts them to come. What attracts them to this product, okay? What makes something better than the other? Accessibility is another thing. Remember this. If you have only one location, it is in the middle of nowhere. It's not going to help. So think about how you can make yourself accessible as well. What value do they place on it? Do they value your product? Of course, if you're promoting a service, you have to make them value your service, or else it isn't successful. So how can you make it successful? How can you make the service good? In what manner? Okay, honestly speaking, I'm willing to pay more for a good air ticket than a cheap air ticket. Why? I would like to go on Cathay than some other brand because more comfortable, more quality service. It's more rewarding, although you pay much more, maybe even double the price. So why do people actually want to take it? Because the value, okay? It's the value. So the money for the value, right? The value is equivalent to money as well. So you make it, or even more than the money. How can you do that? What are their consuming habits? Do they have consuming habits? What do they buy? Are there some daily necessities? Think about marketing then. How can you market along with their daily necessities? What are some daily necessities that we cannot miss out? What are some daily necessities? Yes? What are some daily necessities?
Food.
Food? What kind of food?
Cheap food.
Cheap food. Okay, cheap food. Or maybe even what you use, like toothpaste, toothbrush, soap. A lot of different things can actually assist you. So think about the consuming habits. Do they have any daily necessities that they need? Environmental. Will your product contribute to your target market's debate about environmental concerns? Think about that as well, okay? Are there environmental concerns? What are the major environmental concerns? Right now, maybe about greenhouse gases, maybe in Hong Kong, what else? Acidic rain, so all these you can refer to as well. So, consolidation and analysis. There are the 6 C's, which heads to the summarization. It's used as a Charter Institute of Marketing suggests the 6 C's. Which are the 6 C's? Customer market. What is the market? Identify when you're doing marketing analysis. Competitive position. How the organization is positioned in the market. What is its position? Okay. So there are 3 types of position which we'll talk about later. Core competencies or capabilities. Objective assessment of what the organization is generally good at. So what is the organization good at? What are their strengths? So that is the SWOT analysis that you've done. Chances and opportunities. The nature and the scope of any opportunity available to the organization. Critical success factors or problems to overcome. What do they need to succeed in the market? I've talked about why does McDonald's make a better marketing has a better marketing strategy than Kentucky Fried Chicken. So McDonald's, I don't know if you guys noticed, although they have the $20 meal, they also raise the price for other meals. So to compensate for the losing money of the $20 meal maybe. Constraints, factors beyond organization's control that would constrain the choices or actions in the market, okay? So competitive positioning. 1, value position. What is a value position? Positioning strategy, help to promote a different attribute of your product from those in the market. A way to evaluate your competitor. That is called value positioning. Let's look at this. There's a product leadership, the operational excellence, and the consumer intimacy. So there are 3 parts. So which part are you? Are you a product leader? Are you a leader in the market? Do you contribute to the market? Are you the first one to be innovative in the market? Product leadership. Operational excellence. They're not trying to come up with better products. They just want to produce a volume at a lower cost, okay? A lower cost. Customer. They are related, they can be closely related to the customer. They know the customer's business, so they can deliver the correct solutions over time. So think about it. Are you solution focused? Are you cost? Are you product? Okay? Think about these 3 things. Competitive positioning. Who are your competitors? When you look at it, who are your competitors? I know, like let's take an example. Keep. And just now we had another program. What was it called? What was the other program that was similar to Keep? Oh, Genesis Work, right? These 2 are fairly similar in terms of training. So what are they similar? Do they actually solve the customer's problem? Does not matter whether their solutions are much different than yours. Actually, if there are competitors, that means you're there to make things better. Remember, you can magnify, right, the situation. You can reorganize the situation, make it better. What is your ranking among the competitors? How can you rank? Think about this. What are you? Again, product, operation, customer related. Refer to value proposition. Take note of price, product leadership. You can draw a comparison of 1 or 2 other competitors so that you can see whether you're leading, how you're leading, and what is the difference. You can use a table or a graph to represent this. Lastly, marketing strategies. Marketing strategies. Who are the end users, intermediaries, stakeholders? So operate between the producer and the end users, stakeholders. No direct interest in the product, but have interest in the organization. These are the audience. in the situation. So there are a few strategies that we'll look at, four actually. There's a pull strategy, you pull towards something. So target at end users, very straightforward advertisement approach. You guys all know about how much of an influence advertisement have on people, right? Advertisement is a very big part of our life because we see it every day on TV. And anywhere we go, especially in Hong Kong, we have advertisement in the MTR, on the train, in the bus, anywhere you go, you see advertisements. Sometimes it's crazy enough, you can see it in the washroom as well. So it's quite weird. But anyways, pull strategy. The purpose of having advertisement is to pull the consumers towards you. Remember this. So the end users will come to you, but how can you advertise? Through what channels? Think about it. I talked to you guys about daily necessities. Think about how daily necessities can relate to your product as well. Another thing, push strategies. Target our intermediaries to persuade these people to help you promote your product. Why would they help you promote your product first? How would they benefit? Think about it. Is it just about displaying, stocking, or is it about actually approaching and selling? Think about that. Profile strategy. I think one of the groups talked about this. Profile, actually aimed at stakeholders. Communication about community involvement, ethical stance, business financial performance. Your profile, you build a profile so that you can attract them, okay? This is profile strategy. Tools, lastly, personal selling around buyer and seller relationship, trade channels. On top of that, you can go online as well. Now we have a lot of internet resources that can help support us. So these are some of the other tools we can provide. Okay, so all in all, the marketing channels. There are many marketing channels. You can look at advertising, direct marketing, events, sales promotions, sponsorship, e-marketing, reputation, exhibition, personal selling. All these help to support you to actually have them come to you. So is it pull? Is it push? Is it your profile? Or is it just other tools you need to help enhance your marketing? Lastly, for this part, we come to our financial analysis. Financial analysis, which is on page, let me see, 38, okay. When you look at page 38, okay, what is financial analysis? We've talked about it. Besides the iris, we can look at this. When you look at the first thing, some of the tools, some people use text. I told you your actual data should go into the appendix. So when you are using text, it might be a good thing in your proposal. When you put it in your proposal, it's very easy to read. What are the benefits of using text? What are the benefits of using text? Okay, yes. What are some benefits of using text?
Analyze the chart.
Yes. Is it, you don't need to analyze the chart? Any other benefits? Analyze the chart. It's very straightforward, as you say, analyze the chart. Besides, it can help convey your perspective or what you want the reader to understand. It can disclose only what you select to disclose, but on the other hand, there are limitations. If the reader wants to learn more and you did not disclose it, they can not refer to any data. That's why we want to put it into the appendix as well. Even though you have these statistics inside your proposal, it is better off if you include the details in your appendix. So, like this one for Playworks, it talks about like 98% reported increase of number of students physically active during recess. What happens to the 2%, I would ask, okay? So there are these questions that would arouse it in us, and then as a reader, you would question. So besides these statistics, you are not in detail. So where did the students come from? which school, how many schools did you assess. So you don't have the details here. That's why you include in your appendix, okay? So text reporting, there are some limitations. Then there's the bar graph, okay? The bar graph. When you look at bar graph, it's very visual, it's very straightforward. It summarizes a large data set. It can actually summarize, this one comes from Genesee's work, right? And then it talks about how the different cities, in different cities, there was income and expenditure by site. So you can see that they input the data for income and expenditure. So you can compare how much is there as an income and how much expense. So does it generate enough to support itself? It does, okay? As you can see, until the national office, then it's kind of, yeah. But besides, we can see that it's for the first 2 years. Okay, for this one, you can look at it. It summarizes a large data set in visually attractive form, eliminate key values at a glance, be easily understood due to widespread use in business and the media, okay? Another advantage is it can help check accuracy because you can see the calculation. Data category is shown in a frequent distribution, display relative numbers or proportion of multiple categories. There are disadvantages. It's not detailed enough. As I said, so when you have a graph, it's better off if you have the visual and have the text as well to support it. It should be noted on top of it. So it requires additional explanation because where does this data come from? How did you come up with these data, right? So you have to indicate assumptions, causes, effects, or patterns. All these are not revealed. Another thing, this one, line graph with the bar chart at the bottom. So this is another one. It's the growth in students in the program. So advantages, very clear as well. It can input a lot of data at the same time, usually visually easy to understand. But then it requires less explanation. However, it cannot reveal assumption because part of it causes or norms of data fail to provide accuracy check of calculation as a line are joint accordingly to the dots only. So it's quite difficult to assume whether or not this is actually correct, easily manipulated because this creates a false impression, okay? So depending on how detailed are you going to plot it, okay? It all depends on how detailed. So if you're going to make it really detailed, then maybe it'll work. But if you are not, then this might not be an advantage because when people look at it, they will feel that there is something missing. So lastly, this is Playworks Finances. Playworks. So this is pie chart. When you look at pie chart, very straightforward, very attractive as well. You can put it color, there's color coordination, percentage, and even numbers, okay? So it's visual, it's not as dull. You can compare different data sets. There's a few data sets, and then the percentages can be used, and you can look at numbers at the same time. The advantages, they're not as exact at the same time and can't compare two data sets, more than two data sets at the same time. So it's really difficult to analyze over two. So it's better off, depending on the situation you are looking at, choose the right tool to use. Okay, so the last part we're going to talk about is budget forecasting. So the purpose, what is the purpose? Budget forecasting actually helps to sustain the business, allow the business to run smoothly and effectively by indicating the direction or the need or the span of time estimated. So helps relate to your plans, update or review from time to time. Yearly budget forecast of 12 months, okay? 12 months. So list of expenditures, fixed and variables, direct and indirect, obvious and hidden expenses, sources of income, selling goods, donations, sponsorship. So you should outline before you forecast your budget, outline what details do you need to include in your budget. So 5 steps. Number 1, align, obtain information, input the data accordingly, sales, expense, fixed variables, and calculate the monthly cost. Add notes to explain the assumptions. If there are assumptions, add notes to explain it. Finalize, and then lastly, finalize the budget. So we are going to do this. You will have it on page 39. From page 39 onwards. So this is recycle shop. This is a practice example of recycle shop. So you can look at this example on 39 and 40. You guys are going to input data into page 41, 42, and 43. Very, very simple, very direct. This shows how you calculate. So what you're supposed to do, the numbers are only monthly. You're supposed to project the yearly expenditure. On top of that, I need to change something. It's 500% instead of 100% on page 40. 500% instead of 100% on page 40. So you can see that just from the PPT, they're fixed. I've listed the fixed ones and the revenue and cost of goods. So the details, you can see the fixed ones talks about all the running costs, even without the goods, and then afterwards, the cost of goods. The shelves, the chairs, the tables, the artistic sculptures. So depending on the situation, I want you guys to input the data, do the calculation. I'll give you guys 15 minutes to complete this task, so you guys can work on it right now. Okay, just for easy to read purpose, I put it into a Word document. So, what you have with me now, I'm just going to go through this. What is this actually? Just now, a question was raised about what do we have? Is it a must? Sorry. Is it a must to include? Sorry. Someone asked me a question. Is it a must to include this budget summary into your proposal? No, it's not a must, but it can actually project how much money you need to function your social enterprise. So at least you should know how much money you need. So nonetheless, maybe it's better off you have that assumption ahead of time so that you know how can you finance your social enterprise. So the budget comes from various factors. I just took part of it out. If you want detailed analysis, you can look it up. I believe I gave you, it's called the Chartered Accountant. Let me see. I think the Charter of Accounts for Revenue and Expenses is on, the name is on page 38. So if you guys need to refer to how does the Excel spreadsheet, how should it look like? Pay attention to that. So basically, I'm going to go into, I'm going to talk about this spreadsheet. Why do you need to include this? So basically, there are all the products. You have to include the products. What the shop has. So basically, what are you selling? Is it a service? Then there might not be incurred cost. Or else, if it's a product, then you have to think, what kind of cost do we have? So the shelves, the chairs, the tables, the artistic sculptures, all these would cost money in making. So input all the products under the heading. And then there would be the annual and total sales, the cost per unit. You look at the cost per unit, the units projected. How much do you estimate to sell, okay? How much do you estimate to sell? The cost, the price rate per unit, the markup percentage. I think I changed it to 500, I think, because 100 was too little, I thought. And then the percentage difference between the net price, that is the markup percentage, and we have the total sales, which is the marked up times the number, and then you have the total sales amount. And then the net price, which is over here, okay? So after the markup, what kind of price do you have? If it's $5, it's 500% projected, then it would be $25, okay? So look into that, and that was the product. The expenses, when you look at the expenses, see COGS, what we call cost of goods sold. Although some of the things you assume that it doesn't cost anything, but the making, the workmanship may cost some things, some money as well. So I thought I put in a data saying that for one of it, in kind value, each costs $10, right? Originally, because it was recycled materials, it may not cost a lot, but by putting them together, it might cost a little, so you put in the numbers as well, okay? As well. So, we can look at the spreadsheet. Let me go. I expect you guys to have the number inputs, okay? So, I won't do the annual, it's just a calculation times 12, so I won't talk about that. Let's look at the shelves, okay? The shelves, how many do we have? Shelves, yes. Why don't you do the shelves? So we have 100, but then 100, within the 100, what do we have? We have different costs for different shelves, right? There's 100 shelves, and then the cost, you have to project. Then if you have different shelves, then you have to talk about the cost for each of them, or you calculate as a whole. So the cost.
I put 45 here.
45.
As an average.
As an average.
Yes.
So it but I talked about the amount, one being 25% more than the other.
Yes.
Yes. So you have to calculate that it is equal.
Yeah. I just
Okay.
calculate the weight of me.
Okay. So basically, we have $30, right? With $30, we have 50, and then we have 70, right?
Yes.
With 30, 50, and 70. The markup price is 500%, right? And then what did you come up with? The price. So times 5, we have 150, and then what is the other one? Times 5, we have
2,500.
250, and then 350, right?
Okay.
Okay, and then what do we times? Did I tell you guys? One is 25% more than the other. So one sells 40, the other sells 30 each, right? So we can assume how much would they be? Can you guys come up with the total amount? 6,000, 7,500, and 10,500. Very good. 6,000, 7,500, and 10,500. Okay, so then that equals to 24,000 and 24,000, right? Okay, so now you projected one part of it, and then you go on with the next one. Chairs. What about chairs? Chairs, I said, one person, it's my mistake, I didn't add in how many legs does a chair have. I'm sorry about that part. So, how many chairs do we assume? Well, how many legs do we assume that a chair has? 4, okay, 4. So, the units projected 50. We have cost of each chair is 5 times 4, which is 25, right? And then we have the markup price. 20. My mistake. 20. I was calculating.
I would think 25 is more accurate because chair is more than 4 legs.
More than really?
Of course. Chair, you need at least the seat and then maybe a back.
Yes.
So it's at least $5 or $10 more, so you can make a.
Yes. True, true. Okay, let's just assume 4 legs, 4 legs. Okay, thank you. 4 legs, and then we project how much does it cost? 5 times, well, obviously 100. What is the total sales? 100 times, yes, obviously, 5,000.
I've got a question.
What?
If the markup is 500%, shouldn't we times 6 average price? Because the markup is 500%.
No. 100%.
If 100% you times 2, if it's 500%, you should times 6 price.
Oh, my mistake. Okay, 400% I was talking about, guys. I'm sorry. 400% I'm talking about. 500, oh, yes, the markup is 400%, my mistake. Well, so 400% we should mark it up by. I'm sorry. You guys calculated the same way as I did, right? Did you guys do the same thing?
You got it right.
He got it right. I know, I'm not a math person too. I'm so sorry about this. Okay, 400% true. I was thinking about the one initial. Okay, so anyways, using my calculation from my assumption, I was thinking, yes, 400%. So let's continue. Coffee tables. What about the cost of coffee tables? How much is it? The unit price is, how much is it in kind value is the unit price. How many units do we have first? We have 40 units, right? And then the cost is $10. We mark up. How much do we mark up? 400. So it is 50. Good. And then conclusion, total, how much do we have? How much? 2,000. Good. Okay. The next part. This one. We have 100 pieces. So the sculpture varies in size and cost. It's unit projected. We have 100 pieces. And then cost per piece, you assume. So how much does it cost per piece? $500 divided by 100. How much is it? We assume an average cost of $5 per piece, right? And then the markup being 400 now. Okay. And then how much does it cost?
Is 500, right? I mean, cost.
The price is, what do you mean?
Well, the cost is the material cost.
The material.
The price is going to be 2500.
2500. 25.
No.
25, right? 5.
Yeah.
And then the cost, the total cost is 2500. Good. Okay, good. Okay, so that would come up to our total, which is, does anyone have the total? 24,000 plus 5,000, 29,000, 29,000, 31, 31, 33, right? 33,500. Okay, so we have that projected. Is that it? Is that correct? Any mistake in calculation? I'm not very good at calculation, so just to be certain, anyone find it incorrect, tell me. Okay, so expenditures. When you talk about this, how does the cost expenditures come? So each unit, the shelves, each unit, they cost, they didn't say anything about the cost. Just let's assume there's no cost for this shelf over here, okay? So there's no cost. What about the chair? They have already said there are 50 chairs, 50 chairs, and then the cost for each chair is $20, right? $20. So how much is it? $20.
There should be a cost for shelves.
Pardon?
There should be a cost per shelf.
You guys want, no, okay, the cost for a shelf, if we want to give it a cost for a shelf, then we can assume, then the cost would be the making of the shelf, the material of the shelf. So let's give it $10 per unit. $10 per unit. Because you have to be able to estimate where the material comes from. So let's say if they just build it offhand, then we can make it in-kind value of $10 as well, okay? So in-kind value of $10, we can assume. Any questions? So if you calculate 10, how much does the shelves cost?
1,000.
1,000.